trading ideas for two very interesting looking altcoins out there right now. I want to dive straight into the charts. Let's not waste any time and let's see what we can find. What we can see over here is the Avax chart, and if we want to determine the range for this very interestingly looking chart, we first, as always, have to determine three pivots. We can see that the start of this smaller impulse over here is quite often the first pivot. The second pivot is the end of that impulsive structure. Now the third pivot is very clean, because this third pivot is not only at the exact same price as the start of the first pivot, but also it's the end of this correctional structure to the downside before we form this fresh high, before we started the low of the deviation. So we can go with our range from range low to range high, and we can see that we have an extra pivot over here as well. So we can see that after we form this range high, we formed a range low, then we rejected near the mid-range and we started an impulse to the downside towards the range low liquidity pool over here. Now we know that we can see that we are having a deviation of the range low over here, followed by a reclaim of the range low, and that reclaim of the range low was also followed up by something very important if you want to confirm the deviation, which is this break of structure over here. Okay, because if we analyze the local downtrend, we can see that we had this local downtrend over here, right? Lower high, lower low, lower high, lower low, because this low slightly swept this low over here. Then after this fresh low over here, we formed this fresh high, and this fresh high brought us to the low of the deviation. Okay, so this was the high to break, and as we can see, we broke through that high and opened and closed multiple candles above. So according to trading ranges, we know that after a deviation of the range low, if you get a confirmed flip in structure on a 4-hourly time frame as well, technically speaking, if you have untapped liquidity pools around the mid-range and the range high, we should get an expansional move towards the range high at some point, as long as the low of the deviation holds. But how are we going to anticipate this expansion towards the upside? How can we get into a trade setup? So we have the triggers. Now we have to determine a POI to obviously jump into a long to anticipate expansion towards the mid-range and range high. We have found our invalidation already, which is the low of the deviation. Now we have to identify our entry point. And what we can see over here is that we have this low over here, and this low over here sparks my interest. Now why is this low sparking my interest? Because I think there's many sell-side liquidity resting beneath this low, and there's two reasons for that. First of all, if we look at the daily, we can see that over here we had this previous daily supply candle, right? And we know that previous supply, if we break above it, should be turning into demand. It's what we call a breaker block. So we have this breaker block on a daily time frame, in which we are currently seeing a beautiful bounce from the daily breaker block, right? But I think that this breaker block is potentially designed for this bounce, for people to identify this breaker block and this bounce, in which people are going to jump into FOMO long positions with their stop over here, but most of them will put their stop beneath this low because this low is below the daily breaker. So they think this is a nice setup with a nice invalidation and a nice target. Now I think this is a possible scenario, but people don't realize this was actually not a high probability breaker block. Why is this not a high probability breaker block? Because alongside the breaker block, I want to have a very clear and clean daily fair value gap on the same time frame, right? If I want to play breaker blocks, I want to have a bullish fair value gap aligning with a bullish breaker block on the same time frame, or a bearish fair value gap aligning with a bearish breaker block on the same time frame, right? That's what we call the unicorn setup. And right now we can see that we didn't get that bullish fair value gap. So in my opinion, this is a potential bounce designed to let people FOMO into longs with their stops over here below this breaker block, and that's where it gets interesting, right? Because that basically means that this low is turning into an inducement of this pivotal range low level. So in my opinion, the only way that I'm willing to get into a trade, according to my system, is to get into a trade where other people are getting wrecked. And I think people will get wrecked if we take out these sell stops, test the range low, and then bounce to the upside. All right, now we have to realize that there's also people longing this perfect retest of that range low with their stop beneath this low over here, targeting the range high, right? Now, why are many people putting their stop over here and not over here? I've been teaching you guys, people, and especially retail traders, they are greedy creatures. And the tighter the stop loss is, the higher the RR is to the upside, so the higher the potential profit is towards the upside. So there's also the possibility that this perfect retest is not going to hold. Usually I teach you guys, don't play these perfect retests unless there's a very clean and clear inducement, which we have with these relative equal lows over here. So in my opinion, it is possible to play this perfect retest with your invalidation below the low, the deviation, and your target being the range high. But I also think that it makes sense to use a second entry point potentially to anticipate a potential sweep of those sell stops of the greedy retail traders that have their stops over here. So a second entry, same invalidation, and also, like I said, the same targets, which are the mid-range and the range high, where we have untapped liquidity pools. So right now, very clean potential setup that is being developed on Avax. I stick to my system. If we pump from here, then we pump, but I have to stick to what my system is telling me. And my system is telling me to always enter where other people are getting stopped out. And I don't think that many people got stopped out and wrecked yet. So if we pump from here, that's fine. But no matter what happens, I always stick to my trading system. Today's video is once again sponsored by PrimeXBT. Like I've been telling you guys, they now also offer crypto futures trading next to trading Forex and commodities. What I do really like about the platform is that they have integrated trading views, so you can really analyze the charts with the current exact prices that are available on the platform, in which you will never get front run because you're, for example, charting the Bybit or Binance chart. Use our link in the description down below to sign up and deposit, and you get a 7% deposit bonus. The second altcoin of today is FED against USDT, and also this chart, guys, it's potentially looking extremely interesting. Once again, let's determine the range. We have our first pivot over here, right, the end of this impulsive structure, and then our second and third pivot are being formed at the end of that correctional structure. Very, very clean range. And what I do really like about this range is that we also have this smaller pivot over here that started this smaller impulse towards the upside. And if we look at the range, we can see that the mid-range was getting respected very, very well over here. Quarterly level getting respected very, very clean over here as well. And also the top quarterly level is getting respected very, very well. So always you need to get the respect of those range levels in order for the range to be valid. Now if we extend this a little bit to the right, we are seeing something quite interesting. Because what we could see is that we had our first deviation of the range low over here. After that deviation, look at this very perfect retest of the range low. I've been teaching you guys that these very obvious and perfect retests of the range lows and range highs after the deviations quite often aren't the true retest. Only they can be the true retest is if they have a very clear inducement above the range low or below the range high. In this case, we can see that we had no clear inducement. It was just a simple retest, and then we expanded higher. We expanded higher to make people FOMO into long and buy positions, like this, for example, with their stop loss below that also perfect retest and targeting the range high, because they think after this perfect retest that the price should continue higher. I told you guys, these perfect retests are designed to engineer liquidity below that range low in order to start a potential second deviation. Now what we can see over here is that we did flip structure towards the upside. Alright, so the 4-hour structure did flip to the upside, and like I said, we are currently mitigating that second liquidity pool below the range low over here, in which we're potentially seeing a second deviation. And I love to trade these second deviations, but I need to get my confirmation to the upside and a reclaim of the range low in order to position ourselves long. So if we currently look at the structure, we have an untapped liquidity pool below the above the range high. We have our first deviation below the range low, followed by a flip in structure on a 4-hourly time frame. And currently we are mitigating the beautifully engineered liquidity pool by that also perfect retest. All we need right now is the second confirmation, the second deviation, and the second flip in structure on at least the 1-hourly time frame in order to get an extremely high probability setup targeting the mid-range and targeting that range high. According to my system, all that we need right now on the 1-hourly time frame is to identify the local downtrend on the 1-hourly. What we can see over here, we had a local uptrend, right? over here we can see flipped the uptrend to a downtrend, lower high, lower low, lower high, lower low. So right now it's very simple. We need to break the high that brought us to our most recent low over here in order to flip structure. So that means that we have to break through this high. What's so clean about this high is that it aligns approximately with that range low, right? So that means that if we manage to flip this high towards the upside, that would also mean that at the same time we are reclaiming that range low. So if we manage to open and close a candle on the 1 hourly time frame above this high, we get a very clean long trigger. Once you get that long trigger, then you can use tools like Fibonacci retracement, fixed range volume profile, EMAs and stuff like that to identify your POI to potentially long bet on pullback. Very clean, long, invalidation below the local low, first target being the mid-range for an approximately 2.5 RR, second target being the range high for an approximately 5.5 RR, and obviously you have to keep a movement for potential higher targets. All that we need to do right now is to set our alerts over here. I'm going to set my alerts. I'm going to wait for my alert to get triggered. If we do get that candle open and candle close above the high that brought us to the most recent low, we have all of the confirmations that we need according to my trading system. I'm going to stick to my system no matter what. All that we have to do afterwards is to also stick to our risk management system, execute the trade, and see if the trade plays out or not. I hope you guys did enjoy today's video. If you guys did, make sure to smash up the like button. Also guys, make sure to subscribe to our YouTube channel. And if you guys do have any questions after watching today's YouTube update, please feel free to let me know in the comments down below. And then I'll catch you guys on Monday's video. Ciao, ciao.